Here's a summary of the Hims and Hers Q2 2025 earnings call. Overall performance and key financials. Hims and Hers demonstrated strong momentum in Q2 2025, driven by the growing demand for personalized, accessible healthcare. Revenue reached $545 million, a significant 73% increase year-over-year. Subscribers grew to over 2.4 million, a 31% increase year-over-year, with 73,000 added in Q2. Adjusted EBITDA recorded at $82 million, maintaining a margin north of 15%. Gross margin expanded 3 points quarter-over-quarter to 76%. Monthly average revenue per subscriber, ARPU, declined quarter-over-quarter to $74 from $84, primarily due to the offboarding of some GLP-1 subscribers. Free cash flow was negative $69 million in Q2 due to significant investments in expanding capabilities and working capital, but the company expects to return to positive generation in the second half of the year. Balance sheet strengthened with over $1.1 billion in cash and short-term investments after a convertible debt offering. CEO's key statements. Andrew Dudum highlighted the company's success in meeting market demand for personalized healthcare. He emphasized platform effectiveness. The platform is working at scale, evidenced by subscriber growth and positive customer outcomes. Customer success in weight loss. A white paper showed patients on personalized GLP-1 treatment plans lost an average of 10.3% of their body weight at 6 months, with a significantly lower discontinuation rate, 25%, compared to industry averages, around 80%. This success is attributed to provider access, customization, and app-based tools. Core principles. Hims and Hers prioritizes consumer interests and provider independence, believing this customer-centric approach will become the industry standard. Future growth. The company is expanding into new specialties, starting with hormonal health for men and women, and leveraging a recently acquired blood testing lab for vertical integration. Long-term vision. The goal is to unlock broader access to proactive interventions for longevity, and to transform the platform from a treatment destination to a preventative health hub. International expansion. The acquisition of Zava positions Hims and Hers for international growth, with plans to enter Canada in 2026, starting with a weight loss program. Technology and AI. Welcome Mo Elshanai as CTO, emphasizing the critical role of technology and AI in personalizing the patient journey and improving efficiency. CFO's key statements. Yemiocup provided a detailed financial overview and outlook. Q2 performance drivers. Strong performance in dermatology, oral weight loss, and daily sexual health offerings offset headwinds from GLP-1 offboarding and a decline in on-demand sexual health subscribers. Sexual health strategy. A conscious effort is being made to shift towards more premium daily sexual health offerings, which are expected to improve retention and customer lifetime value. Investment period. The company is entering an investment period for at least the next year, particularly in marketing and technology, to support new geographies and capabilities like labs and hormonal support. Marketing leverage. Despite increased investment, the company expects to maintain 1 to 3 points of marketing leverage annually with a payback period of less than a year. Retention. The transition to personalized offerings is expected to drive long-term revenue retention of 85% or higher. Zava acquisition. Expected to deliver at least $50 million in net incremental revenue for the remainder of 2025. Management's forecasts for future quarters. Q3 2025 outlook. Revenue. $570 million to $590 million, 42% to 47% year-over-year growth. Adjusted EBITDA. $60 million to $70 million, 11% margin at midpoint. Full year 2025 outlook. Revenue, $2.3 billion to $2.4 billion, 56% to 63% year-over-year increase. Adjusted EBITDA, $295 million to $335 million, 13% margin at midpoint. Key assumptions for outlook. Fulfillment of compounded GLP-1 treatments will no longer use 503B outsourcing facilities, leading to shorter shipment cadences and lower revenue recognized per order. Zava acquisition to add at least $50 million in net incremental revenue for the remainder of 2025. Increased investment in marketing and technology. Continued transition toward personalized offerings to drive long-term revenue retention. Significant risk factors. While not explicitly detailed in the summary, the transcript refers to the company's 10-K and 10-Q reports for a discussion of risk factors. Key themes implied or mentioned include competition. Traditional healthcare incumbents are mentioned as seeking to limit providers' ability to prescribe personalized treatments. Regulatory environment. Operating in multiple countries and adapting to different regulatory environments is a complexity. Marketing efficiency volatility. Observed in Q2 due to onboarding/offboarding of collaborations. GLP-1 headwinds. Offboarding of commercially available dosage subscribers created headwinds. On-demand sexual health decline. A conscious effort to transition away from this offering creates a drag. Supply chain and inventory. Investments were made to strengthen supply chains and ensure inventory predictability amidst global uncertainty. Tariff uncertainty. Mentioned as a factor, though currently not seen as a meaningful pressure. Highlights. Exceptional revenue growth. 73% year-over-year revenue increase in Q2. Strong subscriber growth. Over 2.4 million subscribers and 31% year-over-year growth. Weight loss specialty success. Demonstrates high patient retention and efficacy with personalized treatments. Gross margin expansion. Reached 76%. International expansion. Acquisition of Zava opens doors to new markets. New specialty launches. Hormonal health is a key upcoming area. Investment in technology and AI, underlining a commitment to innovation and future scalability. Strengthened balance sheet. Over $1.1 billion in cash. Lowlights. Decline in ARPU, primarily due to GLP-1 subscriber offboarding. Negative free cash flow, driven by strategic investments in Q2. Headwinds in on-demand sexual health, a planned transition that impacts current performance. Increased G&A and tech/dev costs, due to new executive hires, organizational reassessment, and technology investments. New CTO's vision. Mo Elshanoi, the new CTO, outlined a vision to reinvent healthcare through technology. Reinventing healthcare. Focus on making high-quality, personalized care accessible globally. Key pillars. Unified data and intelligence platform for personalized care at scale and process automation, powered by AI that continuously improves. AI-powered personalized agents, providing 24/7 support for an end-to-end patient journey. Global-ready architecture, scalable and modular for international expansion. AI governance, safety, and ethics, prioritizing responsible AI use with human oversight. Data utilization, leveraging data from lab testing and wearables to improve diagnostics, treatment, and follow-up. This summary aims to provide a comprehensive yet digestible overview of Hims and Hers Q2 2025 earnings call.